Good morning, everybody, and welcome to the Australian market preview for the 1st of December. My name is Carl Capilingua. I'm the market analyst over here at ThinkMarkets. It is a pleasure to be with you as we kick off a new month. But hey, wasn't it a November to remember? Terrible rhyming there, Carl. But it certainly was. Look, hey, we had a US election result that was what we call a Goldilocks result. It's what we wanted, Democrats to have the presidency, to have control of the House of Representatives, but the Republicans to retain the Senate. Trump looks like he's going to go relatively quietly. We have COVID vaccines. We've had interest rate cuts and quantitative easing programs from the RBA, and it's been a wild month. Let's talk less about November. It was the best month's performance on the ASX since 1988. But let's start thinking about what's going to happen in December. We'll do that after we talk about the ThinkMarkets Difference, which is substantial, $8 flat rate trades, your own holder identification number, and of course, unlimited phone support. So before your next ASX share trade, make sure you think markets. The agenda for today is to talk about all that stuff. Lots to get through. Let's keep moving. Yesterday, look, great month for November, but not a great finish, unfortunately. Our third consecutive fall. All in all, not anything to worry about, I think, at this stage. Not great, 3 straight days of falls, but when we put it within the context of how good November was, I think it's a fairly natural and necessary in many ways pullback that we're having. Down about 1% and a bit for most of those sub-indices, but I do note technology had a good session, up 0.3%. And as we get to the next slide, we can see it is the outperformer in the USA as well. Not quite getting into the green there, but a narrow loss compared to the sharper losses in the US. Hang Seng down 2% in Asia, otherwise down a little bit less than 1%. Slightly heavier falls in Europe, depending on where you're looking, 1.6% and 1.4% on the FTSE and the CAC respectively, but the DAX encouragingly down only 0.3%. And look, a little bit of a theme here. If you did well in November, you probably struggled in the last trading session. Aluminium, though, still managed a 2% gain. Copper, steel up, high-grade copper in the US up as well. The rest of them pulling back their nickel down 2.3%. Gold and silver continue to struggle, as we saw a tiny bounce in the US dollar index. You can see up there 0.2%, and that took some of the shine off the Australian dollar's recent strength, down 0.5%. Energy, well, oil-based energy contracts coming back, natural gas up slightly. Nothing too major there, I don't think. I think often when you've had a great month, some of that money comes off the table at the end of the month. So I think a lot of it was end of the month shenanigans from the fund. So not too concerned about the tiny pullback here on the S&P 500. I do note that the short-term and long-term trends are still very, very strong. We're compressing within a range between about 35.11 and 36.46. Obviously, we'd like to see it push through to the top of that range and break out into the end of the year. That would be nice. But in the meantime, happy to maintain a long side bias on the S&P 500. The NASDAQ looks a little bit better because it actually did break through its high there at 12.074, then 12.109. So that is constructive. It's also constructive was the fact that it threw in this long tail. Now, I know I'm not using candlesticks, and that's simply because I'm trying to convey a lot of information in a very short area. So I've got the bars on there, but what we're seeing in terms of candles is this. It's a small black body and then a long lower tail. So that's the tail. Maybe I'll do a Think Learning webinar on Japanese candlesticks before too long, and that's the body. And what we like to see is this demand in here coming into the system, telling us that even on the pullbacks, the buyers are still around. Short-term uptrend, long-term uptrend, still very constructive for the NASDAQ. Not so constructive for the local market is the shape of this chart. We don't like to see that acceleration into the close there towards the downside. In terms of where it closes in the range, it's closed very close to the low. So that's a little bit bearish for today's open. I do note, however, with the close of 65.18 on our share price index futures compared to the cash market 65.17.8, it's very close, and we're probably only going to see 0.1, 0.2% fall on the open. That's because we basically factored in the weaker US and European markets last night. We factored in that in yesterday's session. We can see our third down session in a row. hey, we've talked about it, the potential for the price to pull back. It's not a bad thing. I think it's a good thing. It'll take some of the froth out. It'll give us some opportunities to buy some pullbacks in those sectors that have run really hard. We're watching 64.71 as a key level, failing that 63.77. But I do expect we will find somewhere here or here the low for the next leg up. And if you're waiting to allocate capital, the good news is you don't have to do anything. You just wait and watch for one of those candles, isn't it? So that's it. Wait and watch. If you're already in, it's going to hurt a little, unfortunately, because we don't know where that low is going to be, and it will feel terrible when you get there. But hopefully we see that buying come in by the end of the session. Okay, company news this morning. Santos came out with a production guidance upgrade to 87 to 89 million barrels of oil equivalent. That's what this thing stands for here, and lowered their cost guidance as well. So that's very impressive. So when production goes up and costs come down, profits should rise. They said it's due to their strong operating performance. So good news at Santos. If you wanted to know, it's about 15 to 80% better than the previous year. Having a look at the Santos chart, actually looks pretty good. Now, I haven't been able to put a lot of these energy stocks in Think Technical simply because they've been respecting their short-term downtrend. And what I like to see is what we're actually seeing. So I'd like to see the move above that long-term resistance level. So this is long-term resistance. Why is it long-term resistance? Well, you can see it is. It just keeps pushing the price down. So we don't want to take the risk that, for example, in here, that it's going to get pushed down again. So we have to wait and see. We have to see how the demand responds at that level. Is the demand still concerned about this stock, about falling earnings, the COVID situation? Well, of course, we had some vaccines in here, and you can't predict that on a chart, something that huge in terms of its fundamental impact on the market. So we did see that push through. So now what I like to see is a pushback, and that old resistance level should now start to act as long-term support, and a bounce in here. So again, that candle, if you can see that in here, that's going to be a really good sign that any short-term supply that we're seeing in the market has exhausted itself and the demand has come back in, and that's our cue to enter. So I like to buy pullbacks in well-established or establishing. That's what we're seeing here, establishing long-term uptrends. Press pause, because it's going to take you some time to decipher all of that scribble. Okay, not hard to decipher the number of stocks that are going ex-dividend today, and they are the ones that are there for the next few days. Press pause again, have a good look to see if your stock is on there. Okay, broker moves, there were a couple this morning and a couple overnight. What are the interesting ones? Well, TWE, you can see it's featuring here a few times that we do know from, if you watched the news yesterday, it was all over the news, China slapping on a tariff, or effectively what is a tariff on Australian wine sales due to their view that we are dumping our wine into their market. Hey, I'm not here to discuss whether it's right or wrong. It's happened, and unfortunately for Treasury Estates, it means that a lot of the brokers have come out. We've got Citigroup lowering their price target 1040 to 820. I won't read the news because it's all about the same topic for obvious reasons. We'll just look at what they did. Jefferies downgraded Treasury Wine Estates from buy to hold and lowered their price target. Also, Macquarie retained a neutral and their price target, but it is on watch, as it is with Morgan Stanley. That means we may see a change in those in the not too distant future. Morgan Stanley lowering their price target as well. Otherwise, interesting ones, or they're moderately interesting. I'll let you press pause and read them. Chinese manufacturing PMIs and services PMIs out yesterday. They were good, actually, and a little bit better than expected. So we see the services PMI at 56.4, and that's up from 56.2, and the manufacturing PMI at 52.1, that's up from 51.4. So showing that the Chinese economy, in terms of business activity, is heading in the right direction, albeit at a modestly positive pace. But that's still good news for them, and in a roundabout way for us, particularly our materials sector. Okay, data out today. Oh, well, doesn't get any bigger than that. We have an RBA cash rate decision and statement coming out, but I would suggest, given the activity in November, we are not going to see anything major today. We will see RBA Governor Philip Lowe come out and explain himself tomorrow. In terms of what's going on tonight, really, in European and US markets, we do have the ISM, that's the Institute of Supply Management, manufacturing PMI. PMI stands for Purchasing Managers Index. So what are the key people within the organisation intending to do? They literally go out there, send them, it's probably in their email, a survey, and they'll get the survey, collate them and turn it into this index here. Previous was 59.3, don't have an expectation yet. And that's about it. Let's close this one out today and kick off the trading day. Look, you can catch all of the updates as they fall today at our newly revamped market news section. The Twitter handles for myself and Think Markets are on screen, and tomorrow we'll have an Ask the Experts session where you can dial in to our webinar. You need to register for it on the website somewhere. In fact, it's in the market news area, and then there's another link there that says webinars, and click on that, register, and you can ask me anything about any of the stocks you're interested in. I'll do a technical and fundamental as best I can on it for you, and then next week we're going to do a how to value a stock webinar. But hey, shortly we'll do one of those Japanese candlesticks ones as well, hey, won't we? Don't forget, Think Markets is a regulated Australian broker. We do have some products that could see you lose more than your deposits. Give us a call or consult the website if you have any other questions. Otherwise, thanks for joining me this morning. All the best for your trading. Until we catch up again, bye-bye for now.